Hi, guys. Thanks for joining us today. My name is Tanaya Macheel. I'm the fintech reporter at Cheddar, and I am so excited to be on stage with Jeff today. He is a fintech guru and co-founder of Oriente, which I think not a lot of people here have heard about, but I feel like they should. So I'm excited to do this. To kick it off, Jeff, tell us what Oriente is and what problem it is you're trying to solve.
Yeah, so Oriente is focused on Southeast Asia. So it's interesting for me to see when I'm hearing discussions about fintech today, mostly focused on the developed world. It's focused on convenience, and it's focused on disrupting an existing infrastructure. And for us, we're focusing on providing financial services to the 650 million people in Southeast Asia. And if you take Indonesia and Philippines, for example, credit card penetration is 2%. That's less than Tunisia, less than Nigeria, less than Egypt. And unbanked are 70% of the population. So this is a situation where there is no infrastructure. So our job is to build out that whole financial infrastructure and give our consumers the tools to be able to borrow money and buy different consumer goods.
It sounds like you have a lot on your plate.
Sure.
Can you walk us through your business model?
Yeah. So basically, what we focused on is we focus on purpose-based lending. So when you look at it, 97% of shopping is done offline. So we have a total of 2,000 employees in the company, and we launched only about 18 months ago. When you walk into a store, into a department store in the Philippines or Indonesia, we have one of our sales agents in the store, and you download the QR code off of a thing around their neck. And within 8 minutes, we decide whether or not to lend them money. So think about like a firm, that kind of model, but it's an offline acquisition tool. And so we then lend money to these people. They buy the good, a basket of goods, and then they put a 20 to 30% down payment down, and then they pay us back. So it kind of works like that. And yeah, we've gone from having 0 customers in about July, and now we're up to about 90,000 new customers a month.
How many of those people do you have deployed in different stores?
Sorry, what?
How many of those salespeople do you have deployed in different stores?
Yeah, we have about, we'll be by the end of the year to about 3,000 salespeople, and we're being about 1,500 different stores. But these stores are mostly department stores, so you kind of think of a Target. I'm trying to use examples from here, but it's not quite like that. So come visit, you'll see it's very different. Right?
Okay, what are the rates like? How do you guys make money?
Okay, so the rates we charge are about 4% a month, which sounds really, really high. But if you look at what these people are paying from the kind of the loan sharks and whatnot, it's about 20 to 30%. And if you see all these cash lenders out here giving cash loans in the emerging markets, they're charging between 17 and 18% a month. So again, and they're not charging those rates because they're really trying to take advantage of people. It's because there's no infrastructure. The issue in these markets is you don't know who the person is. There's no national ID system. There's no credit bureau. It's very, very difficult to find out who people are and to make a decision on whether to lend to them. So that's kind of where you end up. So our job is to kind of drive those rates down. And one of the reasons we can do that, we have a great back end that does all the data. But we've also have a very, very strong collection team, technology-based, but also real people behind it. And our salespeople are our first line to kind of say, oh, you're a real person, you're buying a good, and you're putting a down payment down. So that's kind of how we've done it.
So what are sort of your standards and requirements for KYC if there isn't something structured in place to be able to do that?
Yeah, that's a very, very difficult thing. So we work with some of the partner merchants to gather data on these people. The first thing, like I said, is to know that they're a real person. This is sounds like an amazing thing, but like, is this really a person? Because I mean, fake IDs are everywhere. There's not even like a synchronized national ID system that really works very well. So you have to kind of just know who the person is. That's the first thing. And then what we end up doing is once you download that, within 8 minutes we decide whether or not we're going to lend you money. And or to buy those goods. And what we do is we get a pay stub for you. We then find out like who your different contacts, where you work, et cetera, those kind of things. And we do all of this using some of the best technology in the world. But we also have a large KYC team that also makes phone calls to the work to make sure that person is there and whatnot. So it's quite a big challenge. We're building this whole entire infrastructure from scratch because it doesn't exist anywhere else.
Do you think that you guys could be sort of custodians for identities?
I mean, and that's the thing. Like everybody here, like if you're in the developed world, you complain about credit bureaus, right? Like we hate our credit bureau; these are terrible. But a credit bureau is a very powerful thing to allow people to get access to credit at a reasonable rate. So yes, what we're doing is we're allowing our consumers and our customers to build their digital identity, so they can actually leverage that data to get access to credit that they deserve. Because when you're paying 20 to 30% a month, credit is not a tool for you; it's actually a weapon used against you. So that's a very, very important difference for us.
Okay, so the Philippines and Indonesia.
And Vietnam now as well. We just launched in Vietnam.
Okay, so what is going on in Vietnam, and how is your progress there so far?
We're making good progress in Vietnam. Vietnam's a little bit different. There's less big box retailers, so we're doing more smaller shops. So we've not decided to kind of do the grab or Gojek model and go into 8 different markets. We kind of roll out very, very slowly and kind of make sure we have the right solution tailored for each market that we're in. So yeah, that's kind of how we're doing it.
You guys recently raised 105 million?
Now 150 total.
150, and sorry, when
150 in equity. And then we're put on some, taking on some debt as well for the balance sheet funding.
When was that raised?
Like last week.
Okay.
I'm not sure I was supposed to say that, but I just said it.
Thank you. Okay, so, and how are you looking to deploy those funds? Because it sounds like you guys have a lot on your timeline. Are you doing a lot of hiring with that?
Yeah, I mean, it's the most important thing is building out the infrastructure, because a lot of other people who are doing things in this area are focused on subsidies, and we're focused on building out the kind of infrastructure, because that infrastructure gives you a long-term competitive advantage. So that's kind of what we're spending our time on. It's building out better technology for collections, better technology for finding out for credit ratings, all those kind of things. That's where a big part of it is. And also our offline sales network. An interesting thing that is actually that for a customer acquisition cost, it's actually cheaper to acquire people using offline salespeople that we hire than actually to use Facebook or Google. So the biggest beneficiary in Southeast Asian venture capital has been Facebook and Google, actually. Because everyone just takes that money and just hands it directly to Facebook and Google.
We are here today as part of the Future Unicorn series. You guys a Future Unicorn?
I think so. We should be soon.
Can you tell us a little bit about your timeline or your goals?
I don't want to like trying to be a unicorn is not like the goal. Like, you know what I'm saying? Like you can put in all kinds of different, ratchets. But no, but I mean, we should be there.
Like, what's your timeline for profitability?
So here's the thing.
Because it sounds like a lot of, the revenue generating part of this is going to come a lot later if you have so much built.
Well, I think the difficult thing with us is like in these markets especially, like you can't, this is going to sound strange, you can't focus on unit economics. That's the worst thing to do right now. We're focused on the total addressable market and building out a sustainable, defensible infrastructure that's better than everybody else. We can raise rates by 3-4% a month, like this, and it won't hurt our unlimited end user demand. But for us, that's not creating the right kind of environment that we want to have for our users and for our merchants. So we're not doing that. So that's kind of an important thing. We could be profitable tomorrow. And that's what you have, the biggest issue in Southeast Asia there's so many of these payday lenders that are online, and they're charging 18-20%. There's one company that's basically changed its name 3 different times in the last year and a half because they get in trouble for charging 24%. They get terrible ratings, and they just change the name and start all over again. That's not the game we want to be in.
Can you tell us more about the consumers in these markets? I think this is so interesting because I have long said that, I love this industry and I love covering this space, but there's a lot of fintech for people that don't necessarily need fintech. So it's very interesting to see you tackle this, but I'm not there, I'm here, and I don't really have a handle on what the consumers there are like. So what is their response to something like this? Are they used to digital financial products already? Are they averse to something like that?
Yeah, so the first thing is that I think is interesting. So before I did this, I was one of the founders of Skype, and I was really I was in charge of all kind of global expansion, right? And so the one thing that was interesting talking to consumers there was if you talk to a consumer in Japan or in the US, oh, this is cool, I can make some phone calls and video calls, it's nice. But when I go to the Philippines or something, oh my God, Skype changed my life. It's it was a need to have, not a nice to have. So in these kind of markets, it's the same thing. For these people, for them to go be able to buy a rice cooker and towels and this kind of stuff at 4% rates, this is stuff that's very valuable to them, that really helps their lives, where it's not just about convenience and being a little bit better. This is really transformative to them. I mean, I was not planning on starting another company. Like, that was not my idea. I'd been a venture capitalist after. And then, but like, when this opportunity came up, I'm like, I kind of have to do it.
Right.
That was kind of it. So these consumers, they're growing like crazy. I mean, the average age in Southeast Asia is 28 years old, 6.4% economic growth. Philippines, the most screen time in the world. They're super digitally literate, but financially literate, they're not very good at. Their idea of borrowing money is like you borrow money and then you kind of hide until you can pay the loan shark back. It's not like used as sort of a benefit.
Well, so how much is there to do as far as financial education and literacy goes? And is the onus on you or on your future partners?
No, it's on us. I mean, that's a really important thing. You have to make it really simple. You have to make it really simple because otherwise they're not used to this kind of process.
How do you make it really simple?
You don't have all kinds of millions different hidden fees, that kind of stuff. You got to be very clear. And everything is installment based. If you explain to them how the installments are, and so that's an important kind of component for us as well to make sure you get that done correctly.
And are they familiar with those today?
Not really.
Like we were just talking back there about installments versus minimum balance.
Oh yeah, like that's why all these like virtual credit lines, we're just launching that right now in a small beta. The idea of a minimum balance is something that you don't want. You still want them to pay back in installments. So it is an educational process.
Right. Okay. Well, is there anyone comparable to you that's doing similar work? Like, do you have competitors? Who are they?
Right now, there's some offline competitors, like Aeon from Japan, and there's Home Credit, which is a big company from Czech Republic that does a good job. Those guys are competitors, but online, not really yet so far. And we're the biggest kind of like online to offline group. We have actually an online and we have the whole offline thing covered. Some people are doing just online focus, but that's 3% of the market, and that's not where we're kind of focused on. We're focused on the kind of mass consumer market.
Partnerships in fintech are huge, but it sounds like you guys are doing a lot yourselves right now, doing a lot of building and hiring.
Our two biggest investors are JG Summit in Philippines, which is the biggest conglomerate. To give you an example, 85% of Filipinos buy something from them every month. They own the biggest airlines, second biggest retailer, biggest food processor, 15% of the biggest telco. I mean, it goes on and on. And our partner in Indonesia is called Sinarmas. They have about $30 billion in revenue. So we really do leverage our partners. One of my other co-founders was the first employee. He was head of product tech and operations at a company called Lufax, which is $40 billion company, last valuation in China. And they were a spin out of Ping An Insurance. So I really value being able to leverage, someone in the market and take the best of what they have and kind of utilize that. Right. So we've used our partners to launch our online ticketing, to launch our retail stuff, to get going, and then we spread out from there.
Could you guys be like an Alipay for this part of Asia?
Well, I think that's one thing that's very, very interesting.
Is that the point?
Yeah, and I think what's interesting is at the end of the day, it's all about transactions.
Yeah.
And I think that what I've seen is, again, after we were at Skype, we were acquired by eBay, which is at the time was owned by PayPal. And what we've seen is that we see a lot of people taking on the Southeast Asia space, coming from a transaction-driven space. Like they start with a payment company, and then they say in the future we're going to offer services, then credit. But for us, we went from credit services to transactions because we solved a real pain point. So we increase merchant sales by 20%, and we give the user what they want, which is credit, to get them onto the grid. If you look at kind of going the other way, put yourself in the use case of a user in these markets. Okay, you don't have a credit card, you don't have a bank account. Why on earth would you ever upload money onto your wallet? And how would you do it? You go to 7-Eleven and do it? It doesn't make any sense. Right. So that's the point. And then they're going to kind of go that way. So our view is that trying to copy something that's used other places isn't always the best way to do it. The best way to do it is to solve the problem for the people in the market and do it that way.
Who are some other companies, maybe they're in other markets and maybe they're not, that you take inspiration from? Who's doing the best at lending in fintech?
The Chinese guy, like Lufax is doing the best. I mean, they really are. I'm an investor, full disclosure. But they're doing a really, really good job. I mean, they're going to do, $2 billion in profit this year. They're fantastic. The Chinese, our engineering group sits in China. We have 250 engineers in Shanghai. And that's one thing that's just remarkable to me to see. Skype's biggest market was China. We brought over all of our engineers to help build this stuff in China, like all kinds of stuff there. And now China's so far ahead in fintech, whatever you want to call it, we're exporting it from there. They're just so far ahead. So, I mean, a lot of the Chinese players, Alipay, they do a great job. Okay, so building. Where are you guys 5 years from now? I mean, at the end of the day, what we're doing is we're building a massive merchant network through our through this point of sales and a massive consumer base. So we want to be able to offer kind of a full suite of products to our end user, and at the end of the day, allow them to be able to kind of buy whatever they want in any store that they're at in the Philippines, and in Indonesia and these other markets.
Are you marketing directly to consumers? You mentioned Affirm earlier, and they're very direct to consumer now, but you remember earlier in their days, they also went that route where they struck up all of the merchant partnerships, and then it was sort of on the merchant to do the marketing to the consumer, to educate the consumer about Affirm.
Our biggest marketing channel is our salespeople in the store.
Yeah.
So that's the most important. You walk in the store, you see these people. And so we don't leave it up. If you're gonna leave this to the guy running the cash register, to kind of explain how this is gonna work, it's gonna be very challenging. So you have to kind of do that yourself. So in that regard, we kind of leverage our people, our ambassadors on the ground are our best kind of marketing.
And do you have those salespeople in Vietnam yet?
Yeah, we do.
Okay.
Yes, we do.
How many there?
We only have 100 there.
Okay.
But we're just getting going.
Is there a target number? How many do you want ideally in each market?
Well,
Depends on the market.
I first would want to have less, but we need more of these people, so we'll keep growing. I mean, it'll be thousands. So I don't know the exact number.
Okay. Should we play overrated, underrated?
Sure.
Okay. Overrated or underrated P2P lending?
That's like yesterday's news, I think. It's so overrated.
Overrated. Alibaba?
Oh, they do a really good job. That's who we take the most inspiration from in the way that they've built the whole full stack. So I think we were talking about before, what is so interesting to me about, because I spend a lot of time in China, is fintech in China, just like digital is not disrupting an existing infrastructure. It actually is the infrastructure.
Yeah.
It's the other way around.
It's the system.
It's the system.
Yeah.
It's not trying to be part of the system.
Right.
So they are the ones, they're okay, logistics are terrible. So, I was there because eBay acquired us. I was in China, and eBay had bought EachNet, and then Alibaba just blew them out of the water.
Yeah.
So I saw them do what they did up close, and it's pretty remarkable.
Yeah, and it's interesting because I think they've leapfrogged a lot of the stuff that we deal with here, and so that's just what so many Chinese consumers were introduced to first. And
because their whole system is totally seamless. So it's not so when you're in the West or developed world, it's product market fit, and you're taking one piece here, taking one piece here, and you're kind of mixing it. In these markets, you're building the whole infrastructure.
Yeah.
So what we are and what all these Chinese firms have been and what all these guys in Southeast Asia are becoming is becoming the actually full infrastructure.
Right. Amazon.
They're pretty good too, I think. I don't know how you can be
But
underrated.
are they overrated?
I don't know how you can be underrated or over, but they're massive, right? They do. I like the fact, again, that they just build the whole infrastructure themselves.
What do you think of the Amazon card?
It's a nice, convenient, cool thing to have. If you look at it, all these sort of Apple, they're nice things but they're not transformative.
Mm-hmm. PayPal.
PayPal is doing very, very well as well. They're not. But again,
overrated or underrated?
Oh God, sorry, you asked me that question. Sorry. I think they got a long way to go in a good way. They're underrated, I think.
Okay.
But they're not where we're at. They don't really have much traction.
Okay. I'm gonna get to this, but we haven't talked about crypto, and I know the Philippines has been particularly receptive.
Very receptive.
Of crypto. Is that in your plans anywhere?
Yeah, we're looking at things related to this because again, in these markets, it's the governments are very, very pro crypto and how they can kind of work around it. Because again, if you're the U.S. and you're the reserve currency of the world, of course you're gonna be a little bit I don't want to have this.
Yeah.
The peso, it just kind of has had some, it moves around. So for them, they're much more receptive to how they can work on these things. And they've set up a special economic zone focused just on crypto.
Mm-hmm. Okay. So crypto, overrated or underrated?
Well, I think it's now it's a month ago it was underrated. Now it's sort of properly rated. It's sort of now kind of coming.
Okay, so is it going to change again next month?
Let's see. I don't know.
Is that all based on price?
No, but I think that's what I'm saying. I think again, the markets that we focus on is actually people are saying the system doesn't work great. The financial system in general doesn't work very well. So they're trying to figure out how these tools can be used. So I think that cryptocurrency is in a lot of ways overrated in the developed world and underrated in the emerging markets.
I agree. Blockchain.
Blockchain is the same. I don't. It's a tool. I don't. I just. That's one of those terms. I mean, that's. You know, when I was a venture capitalist, you just hear like AI, blockchain, machine learning. It's like BS bingo. So I don't even know. You know, it's fine. But it's not like it's a word.
Okay, that's a great note to end on. Thank you so much, Jeff.
Thank you.
Give him a hand, everyone. Next up, we're going to have Yana Heron from